I'm going to get started. Like Director Harris stated, I am Roger Koss. I am the Audit Program Administrator, and like he stated, I started with the department back in 1983, and 4 weeks from the day will be my last official day with the Illinois Department of Revenue. Before I get started with my presentation, I want to talk about what I feel is very important, that is customer service to our taxpayers of the state of Illinois, and part of that is very important communication with tax practitioners. For you that I have dealt with, I have greatly appreciated your professionalism during the 40 years that I have served with the Department of Revenue, and I really am going to miss the professional part of it. Obviously there were times that we did not see eye to eye on issues, but you were doing your job and being professional. I was doing my job and was attempting to be professional. And so I just want to thank everybody for all their cooperation during these past 40 years. So thanks a lot, guys. The first thing I'm going to talk about today is we should be working on having a very quality product, and the product ought to be done in the most efficient time manner. We are going to spend this year or this coming year to really emphasize to our staff the importance of producing a quality work product and doing that quality work product in the most time efficient manner. We recently had a supervisor summit in Des Plaines in September, where we stressed to our supervisors the importance to deal with their staff to ensure that they improve and increase the communication between the auditor and the taxpayer, and to ensure that the taxpayer clearly understands what the audit results are when that information is given to them. Obviously taxpayers have all the ability to go to the fast track resolution program, or through the informal conference board, or through a formal administrative hearing, or the independent tax tribunal. But it's extremely important to ensure that the taxpayer clearly knows where the audit liability came from, the basis that we are determining that liability. So that is going to be an extra emphasis this year, is to ensure that the taxpayers that we are auditing truly understand where their liability is coming from and the support that we have used to set up that liability. The next thing, we are expanding the fast track resolution program. Currently it was basically mostly for sales and use tax audits concerning cash type business such as bars, restaurants, cigar shops. We are going to expand that to specific issues with the income tax, and the specific issues are going to include when we conduct an income tax audit based upon the findings of our sales tax audits, where we will be assessing additional income tax, as well as audits that are being conducted where reasonable compensation or personal service income is the issue. We are currently in the process of formally establishing a fast track resolution program with a full-time administrator, full-time facilitators. Currently, Faith Dolgan and Jennifer Kiefer are serving as facilitators, and they do that in addition to their regular responsibilities in the collection area for Faith and in the legal area for Jennifer. But down the road, we will have full-time staff in the fast track resolution program. And when that happens, obviously it'll be after I am gone, but I assume it will even expand even more than what it's currently been expanded to. We have had recent hirings in audit. We approximately wanted to have 60 new revenue auditor trainees, just like every other state. It seems like that I'm hearing about through, attending Masada conferences and things like that. we were only able to bring on 25 revenue auditor trainees. So we weren't even able to fill 50% of our prospective positions that we wanted to fill. This is not anything that has been unusual. If you talk to the other states, they're having those same issues. So, the one thing that we have done in the Department of Revenue, we have started a program that if you are a revenue tax specialist at the Illinois Department of Revenue and you have 5 years experience, as well as X number of accounting hours, you will now be eligible to be a revenue auditor trainee, because we are looking to give these individuals that work for the Department of Revenue another career path, as well as they have all kinds of knowledge and experience in the Gen Tax system, and they have the accounting classes. And so we are hoping that with the starting of this new program, we'll be able to fill our vacancies much easier with our homegrown talent that, so that is one program that we have started in the last couple of years. In addition, the Federal State Exchange Unit, which I'm sure some of you are very aware of, we added additional 20 new revenue tax specialists in that area. We are continuing to expand what is being done by the RTSs in that section. There will be some of the responsibilities that are done by other sections in the audit area will be done by revenue tax specialists in the Federal State Exchange Unit, so that we can utilize our other resources in a more effective manner. One program that we started this year, during COVID, there was the Paycheck Protection Program. A large number of people went out and applied for loans from the Small Business Administration. They were given the loans, and then based upon the specific criteria, the taxpayer could then request that the loan be forgiven, and it was not going to then be subject to income tax. However, like I said, there were specific requirements. 60% of that PPP loan had to be used for payroll cost. So therefore, if you had to have payroll costs, most likely you should have been registered for withholding. We did receive a list from the Small Business Administration of all the taxpayers in the state of Illinois that received these PPP loans. That's public information. Obviously, as you guys are reading in the newspaper, I'm sure that you've seen some of the articles in the Chicago Tribune or the Chicago Sun-Times, or if you go on the internet, about all the abuses that have occurred with the PPP program and the loan forgiveness. And so we have now started a project where we are looking through our internal system to see that if these people received a PPP loan and it was forgiven, we want to ensure that they are actually withholding taxes. We have just started in the infancy of this project. So we will be working with we will be looking at taxpayers that it appears that they did not properly use these funds. We understand that the Illinois return starts with the federal return, but we do have the ability to add to the adjusted gross income or the taxable income. And so if we come across a taxpayer that did not properly utilize these funds, and they received improper forgiveness, we are going to add the portion of the loan that was not properly forgiven back to either their AGI or their business income tax return, assess some Illinois tax as well as any replacement tax that is applicable. And then we will also be recommending to these taxpayers to file amended returns with the Internal Revenue Service, or we will also be referring these taxpayers to the Internal Revenue Service. So that is a project that we started. As I stated, we're just in the infancy of it, and we're going to see how that goes in the future. Another thing that we have started is a letter of inquiry project. Obviously there's a large number of taxpayers in the state of Illinois. We do not have the resources to conduct audits on every type of taxpayer or every taxpayer in the state of Illinois. So we are going to begin sending out letters to specific taxpayers on the sales tax side, asking them to provide us the documentation to support their deductions that they claimed. For example, if it's a jewelry store, jewelry stores have a large amount of interstate commerce deduction because they say that they sell the ring or the jewelry or whatever and ship it across state lines. That's just an example. We are going to be sending a letter to these types of businesses, asking them to provide the support for their deductions. We'll ask for it for a certain period of time, such as a month or 2 months or whatever. We will look at that documentation. If the taxpayer does not provide the information to support their deductions, we will reach back to them and we will ask them to file amended returns, not only for the periods that we have looked at, but for all periods that are open by statute. This way, we are able to maximize, our coverage of taxpayers without actually conducting a formal audit. So this will not be a formal audit. This will be asking the taxpayers to self-correct what they reported. We did something similar to this back in 2010 when we had a use tax initiative. We sent letters to, several thousand in taxpayers that were not registered for use tax, asked them to go back and look at their purchases and self-report into use tax. So this is kind of an offshoot of that. So we will be doing that for the outliers when it comes to specific tax deductions, such as, sales in interstate commerce, the enterprise zone exemptions, sales to exempt organizations. And this will, like I stated, this will not be a formal audit. This will be asking the taxpayers to self-correct and file amended returns. We just started this. We'll also be doing this on income tax. Basically there's a few of the subtraction modifications that we'll be asking for documentation for the taxpayers to provide us the support for those modifications. Again, we will look at it. If it does properly support their modifications, just like on the sales tax side, if it properly supports their deductions, we'll thank them very much. We'll tell them that, they have properly supported what they've claimed. And most likely we will not conduct an audit on them down the road because they have provided the deduction. So we are looking for taxpayers that are not that do not have the support for the deductions or the modifications that they've claimed. And like I said, this is just to maximize our coverage and send these types of letters to individuals that we would normally not audit. So if some of your clients receive these letters, that is going to be part of that. The PPP loan program project, as well as this letter inquiry project, has started and will be becoming more and more active in the future. Now I'll talk about what we are continuing to see in audits. Obviously the leveling the playing field law took effect a couple of years ago, where if a remote retailer does not have nexus in Illinois, they need to be collecting and remitting ROT based upon the destination. We are continuing to see where taxpayers are either not collecting on destination, or if they are collecting on destination, they are not properly filing the returns. And so therefore, the local governmental units, which this law was, set up to, as it says, leveling the playing field, the local governments are not receiving their proper allocation of local taxes. Like I said, we are continuing to conduct audits on these remote retailers, as well as marketplace facilitators. We are still having marketplace facilitators that are saying that the tax is being paid by the marketplace seller. that goes against the law. And, and obviously we only want the tax once, but technically the marketplace facilitator does step into the shoes of the marketplace seller. And we are continuing to see that that is not occurring. Recently, and this is going to begin on an annual basis, if you go to the Illinois Department of Revenue website, if you click on the businesses area, there is a list of things that we are continually to see issues on in the audit process. For example, this year there's something out there about what we are seeing concerning leveling the playing field, what we are seeing concerning cash businesses that are under reporting their receipts. There are things for the transactional returns, such as the watercraft use tax is not being paid properly when an individual is purchasing a watercraft from another individual. They're not paying the proper value, or if we conduct an audit on them, they don't have the documentation to support the value. Obviously, there are also issues out there where the taxpayers are not keeping the documentation to support their exemptions, such as resale certificates, tax exemption identification numbers. So this is an area on our website are the major issues that we are seeing in the audit process, as well as on the income tax side. There's issues concerning the reasonable compensation subtraction or personal services income. I think there's a thing in there about apportionment or 80-20 companies or non-business income. So you can go on our website, you can click on the businesses area, and I think it's called recurrent taxpayer non-compliance issues. If we continue to see things that are happening new, and that information is given to our OPM area, they will revise this during the year. However, it is now a requirement that this is done by the end of October, November or so of every year, because this information is required to be provided on our annual report. So I know at one time we used to have that out there. It wasn't updated a lot, but it will be updated on a more regular basis going forward. I think the other thing, and I don't remember if Richard mentioned this or not, but effective January of 24 for sales tax audits, we are going to be uniform when it comes to payment will equal agreement. It has been payment equals agreement for income tax for a long period of time. For sales or use tax audits, you would have to sign the return to show that you was in agreement with it. We changed that in this recent legislative session. And so starting January 1st of 2024, for a sales and use tax audit, if you make a payment, that is now going to be treated like income tax and will be agreement. So what does that mean? That means that if you want to stop the interest from accruing and you make a payment and you want to go to a hearing or you want to go to the independent tax tribunal, you will have to file a claim. That claim will then have to be denied, and then you will have your formal protest rights if you pay the entire amount. Just very similar to income tax is for sales tax will now be payment equals agreement.